Hello, everybody. Jamie Trull, your favorite CPA and profit strategist here. And we are starting something new on this channel, and we're going to keep going with it if you like it, if you think we should do more of these. But I've been inspired recently. Unfortunately, what has inspired me is a lot of the news around financial scams, some of them COVID related, some of them not, some of them banking scams. It just seems like we are in the age of the scam these days. And I'm specifically talking about companies that are perpetrating scams or allowing for the perpetration of financial scams. And I wanted to do a scam report. There has been several new things that I wanted to bring up. A lot of it relates to small business owners. A lot of it relates to COVID relief. But really the purpose of this segment is to talk about any and all financial scams and how we can protect ourselves from them and things that we need to be aware of. So if you like this, give me some ideas down below for additional things that I can post about. But today we have 3 different types of scams I'm going to be talking about. So specifically, we're going to talk about PPP loan fraud. Now I know some of you have moved on from PPP. Now we're not talking specifically about consumer PPP fraud. We are talking about the companies that helped perpetrate fraud. And we're specifically going to be talking about some new news that has come out recently on a few of these companies. Okay, so we're going to talk about that first. Then we're going to talk about ERTC Mills. That's Employee Retention Tax Credit. If you follow my channel, you've probably seen some of my things that I've done about the ERTC in order to really educate consumers to make a smart decision. But there are a lot of scammers in this space, and the IRS has even put out a warning about that. I have a specific video for that, but we're going to talk about some high-level things to watch out for here in this video. And then the last thing, we're going to talk about my least favorite bank. You'll find out who it is here at the end of this, but they are in trouble yet again. And so we're going to talk about why to avoid that specific bank and what they are in trouble for this time. So let's start with a little bit of vindication, please. I really am not typically a person to say I told you so. I'm actually really lying about that, because if you ask my family, I'm absolutely the kind of person that says I told you so. But in this case, it is 100% warranted. So recently, just a couple of weeks ago, the House Subcommittee on the Coronavirus Crisis came out with a new report, and it is specifically around PPP fraud. So it's 130 pages. It's actually not a bad read as far as congressional documents go. It's pretty interesting to read through, but they specifically zero in on a few different companies who help to perpetrate or allow for the perpetration of PPP fraud, meaning getting loans to people who really shouldn't have gotten them, not having the correct fraud procedures in place, not cooperating at times with the SBA and with document requests to make sure that loans were not fraudulent. And I'm going to tell y'all, one of the 2 main companies that are named in this is one of the companies that I did quite a bit of content about earlier back in 2020 and in 2021. So some of you have heard me talk about Womply. This report talks quite a bit. There's several pages that are dedicated just to Womply and also to Blueacorn, which are both considered fintechs. They are not banks in and of themselves. So what these companies did is they sprouted up, right? Essentially, Womply was doing completely different work in a completely different industry, and they saw an opportunity to jump into the PPP world. And so what they basically became was a processor. They were not a bank. They were not the one who was actually facilitating the loan. However, they were the ones that would help connect consumers with the banks. So they would partner with banks and send consumers to them. Well, part of that is that they were supposed to also be making sure that those consumers were people that actually would qualify for a loan, and to have some process and procedures in place to protect from loan fraud. As you can guess, that was sorely lacking. Lots and lots of people were able to get fraudulent loans via platforms like Womply specifically. And the reason for that is they probably weren't overly invested in whether these loans were real or not, because of the fact that they were paid per loan that they made, right? They made money. They made $2 billion, y'all. $2 billion. And they really only got into the PPP game towards the end. So within a couple of months of 2021, they made $2 billion. Okay? Now, I called them out to you last year, largely because I was very skeptical of them. I was skeptical of the fact that they were allowing, and not even just allowing, but encouraging people to apply for 2 different PPP loans at one time, telling them they could get them both right around the same time, which was absolutely not true, not in accordance with guidance at all. I warned people about this, but unfortunately, the entire rest of YouTube was basically advocating for them, except for myself and my friend and preferred vendor, Hannah Smolinski, who is Clara CFO on YouTube. She also was, issuing warnings about Womply. And we wanted to make sure that people went in eyes wide open, because if it seems too good to be true, that's one of the things we'll learn in the scam report is it probably is, okay? Womply has gotten into a good amount of trouble. We don't know where this is going to go at this point, but I will show you a little bit of this report so that you can take a look yourself. I'll link it down below as well. So this is the House Subcommittee report, and I love that they call it, "We are not the fraud police," right? Because ultimately fintechs were saying, oh, it's not our job to police this for fraud. So that ultimately really made it very possible for people to get fraudulent loans. But if you come down into here, one of the most interesting, you can get the kind of the high level summary in here of what happened with PPP. But like I said, it says the investigation found that 2 unvetted and unregulated fintechs, unregulated is never a good idea in this specific type of scenario, together facilitated nearly 1 in every 3 PPP loans funded in 2021. So they were not even really in existence in 2020. They really ramped up their game when it came to PPP round 2. Womply and Blueacorn failed to implement systems capable of consistently detecting and preventing fraudulent and otherwise ineligible PPP applications. Their lending partners, who were tasked with supervising the activities of these fintechs, often did little to oversee the activities of the companies to which they delegated their responsibilities. So there is some responsibility on the banks as well who partnered with them. It was a little bit of a passing the buck of who was responsible for what, but ultimately this report is calling out the fintechs and also then the banks who partnered with them. So when you go deeper into the report, even just starting on page 6, there is a whole laundry list of the things that Womply did specifically that were things that the committee felt like were wrong or illegal or unethical that they wanted to put into this report. So like I said, lenders paid Womply over $2 billion for what they did, largely through this PPP fast lane product that they were offering. And what's interesting is if you come down here, I love some of these quotes that they were able to get. It says multiple Womply lending partners criticized Womply's fraud prevention practices, describing its systems as put together with duct tape and gum, and accusing Womply of allowing rampant fraud to infiltrate PPP. So basically they're pointing the finger at Womply saying, hey, it's your fault that this happened within here. Now, it's important to mention one of the other things that was pointed out by my friend Hannah, Clara CFO, is that Toby Scammell, who is the CEO of Womply, yes, his last name is Scammell, had also previously been indicted and jailed for insider trading, okay? So now granted, does that necessarily mean you're going to be a scammer? If you were a scammer once, will you always be a scammer? Does insider trading mean you're going to have a scammy fintech company? Not necessarily, I guess. But in this case, turns out he's a scammer. So it even points out the fact that he's permanently barred from participating in the securities industry and yet was allowed to basically create a fintech to partner with banks to facilitate PPP loans under COVID and collect $2 billion in fees. And oh, by the way, he also received multiple PPP loans himself, as did other members of Womply's management team. And what's hilarious about this too is, yes, he was permanently barred from participating in the securities industry after having that fraud. He was the one leading Womply's fraud prevention efforts and instructed his company not to cooperate with federal PPP fraud investigators. What's interesting about this is that a lot of people received who were using Womply emails during this time saying, yes, we are fully cooperating. We are giving all the documents that we need to on fraud prevention to the SBA and to everybody who's asking and to the inspector general. And it turns out that was absolutely not the case. They were not cooperating with these agencies at all. Now, for those of you who received loans through Womply, does this mean anything for you? In general, no. As long as you got the loan and you did it correctly and it was a legitimate loan that was something that was calculated properly and was due to you, then you're fine. This is really more about Womply and how they allowed for fraud, people who were blatantly perpetrating fraud through that platform by making up companies, different things like that. They did not have the controls in place, nor did they really have the incentive to have the controls in place to prevent that, because they were making money off of each and every one of those people. So for you, if you got your loan through Womply, if it's been forgiven, likely there is nothing to come of this. So I really wouldn't be concerned about it. The only thing you might want to know about and be aware of if you are someone who used Womply is this point within this report. It says Womply may have transferred the sensitive personal and financial data of hundreds of thousands of PPP borrowers to a new business. Basically, they updated their privacy agreement to notify its customers, including PPP applicants, that the company claimed the right to transfer all of that information that they collected, tax documents, sensitive information, to its new company. Okay, so there's a new company that Toby Scammell is now using. They've closed down Womply, it appears, and now he's got another fintech type company that he is starting to market, and he's marketing and using this information potentially to market to people. So that's just something to be aware of with your own personal privacy. I did go look that up just because I wanted to see it for myself. And so when I went to the Womply website, it really just points you to this new solo company that they're working on, which is the easier way for freelancers to pay and get paid. And they've created this new company, Solo. So if you come over here though to legal, which I think is interesting that it's still on here, and you go to the privacy policy, I did find specifically where that has been updated. So if you search, here's where it says, these parties are our corporate affiliates. Our affiliates may process your personal data for their lawful business purposes, including but not limited to improving their products and services and marketing their products and services to you. They include but are not limited to, so how many other affiliate partners are there? Solo Global Inc. So that's just something to be aware of. If you start getting marketing emails from Solo Global Inc., you want to know that this is a Womply, essentially affiliated company that is run by Toby Scammell. So make a decision on whether or not you want to stay on any and all of those marketing emails. Now, the second type of scam that we are going to be talking about today in this scam report is ERTC Mills or ERC Mills. This is related to the Employee Retention Tax Credit, which is a COVID tax credit that is related to paying payroll and can be something that adds up quite a bit. I know a lot of business owners that have gotten hundreds of thousands or more back in this Employee Retention Tax Credit, and you can still claim it today. You can actually go back and amend prior payroll reports to claim it. So what's happening now? Well, ultimately, fraud is running rampant yet again. And they're actually thinking that fraud on this could be even higher than it was when we were talking about PPP. So a lot of IRS agents have been diverted or will be diverted to the efforts to be going back and auditing these employee retention tax credit claims. Now, the reason that this is something that I have an issue with, and you probably saw my video from a couple of weeks ago where I talked specifically about ERTC scams and warned people about them, is that ultimately small businesses are getting scammed by trusting people that look like they know what they're talking about, okay? So always do your due diligence, look at companies, see if they just sprouted up in the last year or so, and if the only thing that they do is ERTC, you might wonder if they are a legitimate company. If you can't see who you're working with, if you don't know who it is, if it's just a nameless, faceless internet site that is soliciting you or something like that, telling you you could save tons and tons of money, then I would definitely just question, do your due diligence around them. They might be legitimate and super helpful, but also a lot of these companies either are going to tell you you qualify when you don't or don't qualify for as much, or maybe you do qualify, and a lot of businesses do. However, they are going to charge you exorbitant fees in order to file this for you. And typically they're going to be fees that are contingent on the credit, which is considered a contingent fee, which in general is very much looked down upon in the accounting industry, and some may say that it is also illegal. So the IRS actually issued this specific warning to people related to these types of companies, which are quite predatory in nature, and you want to be on the lookout for them. So here's the press release, and this first part here just says, warn employers to be wary of third parties who are advising them to claim the ERC when they might not qualify. Some third parties are taking improper positions related to it. And these third parties, here's kind of one of the things that may help you know if that's what's happening. These third parties often charge large upfront fees or a fee that is contingent on the amount of the refund and may not inform taxpayers that the wage deductions claimed on the business's federal income tax return must be reduced by the amount of the credit. If you're getting that credit, you're also going to have to go back and you're going to have to amend your old tax return, and that's going to increase your taxes. You're still going to have savings, but again, a lot of companies are not telling people that they're going to have to do that. And then they're charging something like 15, 20, 25% of the credit in order to do the work. And so ultimately, once those taxes are paid and once the company who is doing this work is paid, it leaves very little left to the business owner. And at times, I have heard people come to me and tell me about huge fees that they were told it would cost them for ERC. One woman I just heard from this week told me that she had been quoted about $68,000. I have another company that I know of that was quoted $350,000. Again, these were large credits that they were going to be getting, but the fact that these businesses that they were working with were only going to be taking a few hours of time or maybe a day to do this work shows you that those are just exorbitant fees. There is absolutely never a case that you should be paying 5 or 6 figures for a few hours of work by someone who may or may not even be qualified to do this work. So I have a lot of stories that maybe are for another day of specific examples, but I have been reached out to by a lot of people saying thank you, because one of the things that we do, if you're trying to figure out how to combat this, don't give up on the credit itself, because again, you can get back quite a bit of money. So don't just pass on it because you're worried about, partnering with somebody and whether they're going to be reputable or not, and worried about all of the requirements with it, right? Grab my spreadsheet. It's $27. That's it, $27. JamieTrull.com/ERTC. And watch some of the videos that I have done on ERTC, because being informed is the best way for you to figure out if you're hearing something that's too good to be true, or if somebody's telling you something that doesn't jive with what you have heard elsewhere from reputable places. And make sure just to triple check. And I would love for anyone who has had an experience where either they have been approached by somebody about ERC and trying to get them to use them to file ERC and what they were planning to charge them, let me know below. Or maybe if you did use somebody that charged an exorbitant amount of money, let me know below. I'm actually researching a lot of these independently for my own purposes. And so I would love to know who out there you have seen doing this. Okay, so moving on to scammer number 3, our final scammer for this specific scam report. Again, give me some other ideas, other people you want me to look into, maybe for the next scam report. I'm not sure if I'll do these monthly, but if you guys are interested, I would love to do more of these, because I love to out companies, specifically big companies that are taking advantage of consumers and small business. And this specific company, I love when they shoot themselves in the foot and then they get fined for it. So Wells Fargo, my least favorite bank. Quick aside on that, the reason it's my least favorite bank is because I almost took them to small claims court when I was 25 years old. I had my first mortgage through Wells Fargo, and they basically lied to us and went against their contract. And even though we scraped to collect enough money to get out of our private mortgage insurance, they refused to let us out of it, and they kept moving the needle, and we finally ended up refinancing. But as a 25-year-old, it was a financial strain to be dealing with, and they really just were dismissive of us, and we're just completely doing illegal things. And so I know that if they can do that, they can do that to others. And they are probably the bank that has had the most scandals over the last 10-ish years or more. And so it surprises me not at all when I see new headlines related to Wells Fargo, but I love this one because they're being ordered to pay $3.7 billion with a B dollars related to their illegal activity this time, just this time. And this one relates to unjust foreclosures and vehicle repossessions that they should never have done. So again, they are no stranger to taking advantage of end consumers who really have very little power to do anything about it. So this fine was assessed by the Consumer Financial Protection Bureau, CFPB. Okay, and this is the largest penalty imposed by that agency, which I think is fan-freaking-tastic. They are consistently in trouble. They are repeat offenders. I will just say, do not do business with Wells Fargo. I'm just going to say it based on my past experience and the number of scandals that they have been embroiled in. They are not for the consumers, so I highly suggest looking for another bank. So that's it for today's scam report. Let me know what else I should cover, anything else that you have or any experiences that you have had, specifically with bigger companies that are taking advantage of consumers and small business owners. That's what I really want to focus on. And I also want to dispel the stigma that by being a part of one of these, by having, one of these companies and trusting one of these companies, that you did something stupid or that you should have known better. Because honestly, a lot of these types of companies, we're talking about banks, we're talking about companies that are being promoted on things like NPR, right? Like, we're talking about big companies here that we should have some inherent level of trust. We would expect for them to be good stewards and good fiduciaries, and they are not necessarily going to be that, right? Similarly, sometimes these are accountants who are doing these ERTC scams or are, charging exorbitant fees for ERTC, and we expect there to be some level of trust there. But unfortunately, it doesn't seem like that's always the case. And so I just want to make sure that you are aware of the things to be looking for and as informed as possible so that we don't walk into scenarios where this could happen to us, because honestly, it can happen to anybody. All right, I'll see you next time. Make sure to join me for my other videos that are geared towards small business owners and profit strategy. And I'll meet you next time with another scam report. Bye for now.